into another week. It's Monday, the 13th of June, and this is the news for the Cryptoverse DAO starting today. Do give us a like, give us a retweet, do follow us on YouTube and Medium and Twitter. If you go to our linktree, linktree.ee/cryptoverse-DAO, what you'll find is you can join our Discord page. You can basically follow us on Twitter, where we usually keep you intact with everything that's happening, all the updates. We do our surveys, we do our collaborations, our AMAs, and all our announcements. Whenever we're like live and sort of functioning, we do tweet these things out. So do give us a follow. And yeah, do click the alarm function here, right? The notification function here, so it keeps you updated with the latest sessions that we have. It could be a technical session, it could be the news, it could be an education section, but we do keep you guys posted about our open discussions and any videos that get uploaded, and we do that all on Twitter. We also basically upload all our content onto YouTube, so you can go into our Cryptoverse DAO YouTube page, click the subscribe button, click the bell notification button, so you are aware of all the things that we're uploading. So if you check out our playlist, we normally break it down in news, AMA, education, technicals, and yeah, so for now we're sort of covering the news. Do look at our previous videos. We do education, we do all sorts in YouTube. And also one thing that's underrated is Medium. If you check out our Medium page, what you'll find is we sort of link up all our recaps there, and anything that we've previously talked about in discussions, all our sort of links, all our literature is sort of published here. So the last discussion we had, we covered the Robstein testnet merge on Ethereum. We talked about adoption news. We talked about Jay-Z's collaboration on blockchain, education with Jack Dorsey, former owner of Twitter, and we look into all these different segments. So do give our Medium page a follow. Now let's get into the news now, guys. Let's look into the news, and right now everyone is sort of looking at this price action on Bitcoin and looking at a bearish market right now, and today we made our lowest low. We actually made like the last time we were at 23k, it was January 2021. So this was the lowest we've ever been before, right? So the last time we were at 23k, it was January 2021. So as we hit these bearish markets today, we're going to look into the factors that created this lower low. Last week, in the last couple of weeks, it was Terra Luna and a sort of sell-off of Bitcoin. And this week it is Celsius. So let's look into the news articles today. If you can look into these things, we'll be covering these things today. So we'll be covering Celsius and how they halted withdrawals, fiat and crypto withdrawals, and this is what created the market conditions that we currently have. We're going to cover the basically the fund rate that's coming up on Wednesday, and how that will impact the financial markets. Fed meeting, we have a few things to cover, but let's go straight into why we're seeing this pullback on the charts right now. Why did we hit Bitcoin? Why did Bitcoin hit 23k today, So let's start off with this article here, and it reads out crypto lender platform Celsius. So before we go into this sort of article, let's quickly look at what Celsius protocol is all about. So you can follow them on Twitter, but what is Celsius Network? Celsius Network is a place where you can sort of borrow and lend cryptocurrencies on DeFi. and basically it's a place where you can sort of, stake your tokens and earn. And as of today and this weekend, crypto lender Celsius halts withdrawals due to extreme market conditions. So let's read this a little bit more, right? So the cryptocurrency lending platform Celsius Network has halted withdrawals because of extreme market conditions, as the value of digital assets market slipped below $1 trillion, currently at 820 billion. So Bitcoin dropped to a 17-month low to 23K, 23.8K after the Celsius announcements, whilst Ether, the world's second largest cryptocurrency, after Bitcoin dropped more than 15% to $1,250, its lowest since January 2021. Meanwhile, Binance, the cryptocurrency exchange, announced on Monday that it had temporarily paused Bitcoin withdrawals owing to a stuck on-chain transaction. So yeah, there's been these impacts, and Celsius halting withdrawals has caused a bit of a dip in the market. But let's continue reading into this Celsius blog post. So this is what they wrote, right? It wrote it was pausing all withdrawals and transfers between accounts for its 1.8 million customers. The company offers customers highest interest rates, as much as 18% on their cryptocurrency deposits, and pays the interest in crypto assets, which includes its own token called CEO. So this was their sort of statement that they made. So they say, due to extreme market conditions, today we are announcing that Celsius is pausing all withdrawals, swaps, and transfers between accounts, the platform said. So we are taking this action today to put Celsius in a better position to honor over time its withdrawal obligations. So this happened, and this caused a bit of a stir in the market, because it is one of the biggest borrowing lending protocols on DeFi in crypto. And for them to basically, halt transactions. So currently they have 5,000, how many things do they? So they paid up to 83K in Ethereum in lending. So Celsius has sort of halted withdrawals, and since the announcement, we have seen a drop in price, as we can see here, right? All of this movement was the second Celsius made the announcement. Let's dive deep a little bit into this, right? So let's look into more from the article. So it goes here. The company also had a close relationship with the defunct stablecoin Terra. At one point, investors $500 million of fund in the Anchor protocol, Terra-owned saving and lending service. Celsius also offers customers high returns. They accept their interest payments in the project's own crypto token. So yeah, so you're basically seeing a bit of selling pressure, especially with withdrawals halted on Celsius, right? Let's continue. After this announcement was made a couple of days later, today on the 13th of June, Nexo protocol basically made a buyout offer to Celsius. So let's cover this a little bit. So the article here reads, Nexo proposes buyout of Celsius assets as crypto lending rivals halt withdrawals. So crypto lending platform Nexo. Let's kind of look into what Nexo is all about. So if we go check out what Nexo is about. Currently, Nexo is the world leading and most trusted lending institution in the digital finance industry, right? So they currently have 4 million users, 40 fiat currency available, and they have like a big following. They have a big following, and currently they have $12 billion under their portfolio and management, and they support 39 cryptocurrencies. So yeah, so Nexo basically proposed buyout of Celsius assets as crypto lending rivals halt withdrawals. So it reads here, crypto lending platform Nexo came forward with a big bid to acquire certain remaining qualifying assets of its competitor, Celsius Network. So let's continue reading about this because this is important, right? So digital asset manager Nexo responded to the news of its rival Celsius pausing withdrawals by tabling a proposal for a buyout of certain of the some of the firm's liquid assets, pointing to what appears to be insolvency of Celsius. Nexo took to Twitter on Monday morning to post a letter of intent outlining its potential interest to acquire certain remaining qualifying assets, mainly collateralized loans, receivables secured by corresponding collateral assets, brand assets, and customer database of the business. So yeah, so this was the tweet that they put out. Zoom into this a little bit. This is what Nexo wrote out today. So they wrote out, after what appears to be the insolvency of Celsius Network, and mindful of the repercussions for the retail investors and crypto community, Nexo has extended a formal offer to acquire qualifying assets of Celsius Network after their withdrawal freeze. So that was their tweet out. So that's the latest update since the freeze has taken place, right? So let's continue and continue understanding these market conditions. So these are things that we basically saw that caused the recent dip. The other thing to keep aware is MicroStrategy's slump, in stock price, and to see if they liquidate if Bitcoin falls below 21K. Right, if MicroStrategy has been accumulating these dips and Bitcoin falls between 21K, we'll be looking quite conveniently into seeing what Saylor and MicroStrategy do from here. So the key takeaways here from this article here is MicroStrategy's share slump as Bitcoin margin call looms. Right, so MicroStrategy has vowed never to sell any of the approximately 130K Bitcoin it has in its position. So currently, MicroStrategy is basically putting out the statement that they will not look to liquidate. But everyone is sort of keeping their eyes and keeping tabs on price action, especially the crypto community. But they have voted to not sell, right? So the question after the weekend slide in cryptocurrency is whether a margin call will force the technology service firm hand. Bitcoin is down 14%, traded below 24K after a weekend rout, in part tied to crypto lender Celsius Network, right? So how is this having an effect on MicroStrategy? So yeah, MicroStrategy is down 24%, 21% in pre-market trade. Heading into Monday, the stock has dropped 76% from its November peak, right? So CEO Michael Saylor, a crypto enthusiast, has led MicroStrategies to aggressively accumulate the cryptocurrency. These Bitcoin purchases have made not just with profits from its analytics software business, but also from borrowing via convertible bond issuance. So yeah, they've been taking out loans to buy these dips on Bitcoin, and currently, from last week, loan accounted for so their loan accounted to for $2.4 billion of its $4 billion assets in Bitcoin purchases. So yeah, so we're gonna keep an eye to see if there's a margin call. So CFO Feng Li said during the first quarter conference call that only the Bitcoin purchased against its stockpiles were subject to a margin call. So here's this quote. So he goes, now the risk of really are that we have to contribute more Bitcoin. Now, as you can see, we mentioned previously, we have quite a bit of uncollateralized Bitcoin. So we have 95,643 unencumbered Bitcoin. So we have more that we could contribute in the case that we have a lot of downward volatility. But again, we're talking about 21K before we get to a point of whether there needs to be a margin or more collateral contributed. So we'll keep an eye on this for sure to see if basically there's a margin call at 21K for MicroStrategies, and see if they liquidate. So that's something really important to follow up. So these kind of things, guys, they create slumps in the market, and now, like, I would want to stay positive and give you more analogies, but I would like to sort of point out to a few more things. So, another thing that Stanley Druckenmiller, a famous billionaire, in Wall Street, he's so whenever these sort of people like Charlie Mungers and the Stanley Druckenmiller and Warren Buffett, they have something to say, we keep an eye out because their sort of analogies do have a lot to a lot to like negate with the markets. A lot of funding goes through their sort of analogies on Twitter and their interviews, so we keep an eye on what they're saying. So here, uh, the article reads: Billionaire investor Stanley Druckenmiller says we're 6 months into a bear market, and it still has a way to run. So he basically points out that we're still in the bear market, and we might see lower levels of basically price action. So let's read a little bit from this article. So it goes: Billionaire Stanley Druckenmiller is downbeat on the markets right now and says the current bear market has some ways to run. At a 2022 Son investment conference, the investor-in-chief uh, said, my best guess is that we're 6 months into a bear market. For those tactically trading, it's possible the first leg of that has ended. But I think it's highly, highly probable that the bear market has a way to run. So he believes that the markets will go lower before they go back up. So let's continue with his quote here. So he reads out: given the extent of the asset bubble and destruction in the market, given that what's going on in Ukraine, giving zero COVID policy in China, I don't take a lot of comfort from that. So I assume pretty strongly and pretty strongly soon we're going to have a recession sometime in 2023. So his sort of point of view is on several different analogies, so he points at the war in Ukraine. He talks about the COVID policies in China. He talks about many things, but he's also this week talking about federal fund rate. So this is another important thing that we have to look into. So on Wednesday the 15th, between the 14th and 15th, so the 15th, we have an FOMC statement, right? Are we increasing our interest by another 50 pegs? These are things that we have to keep an eye on, because like the more these things go up, the more it infiltrates the price action on all our asset classes, from stocks to cryptocurrencies and forex. But yeah, so we have the big FOMC statement coming out on Wednesday, and we kind of have a little preview of what's about to happen with it. So if we look into this Fed meeting preview, so the article reads: June Fed meeting preview. Markets expect another big rate hike, right? So investors expect the Federal Open Market Committee, FOMC, to continue its aggressive approach to monetary policy, tightening at the upcoming meeting on June 14th to 15th. The Federal Reserve will likely deliver its second consecutive 50 basis points interest rate hike and continue to roll off assets from its nearly $9 trillion balance sheet. The last time the Fed made two 50 BPS interest rate hikes non-consecutive was in mid-1994. The Fed has been walking a tightrope in recent months, attempting to bring down inflation levels from multi-decade highs without plunging the U.S. economy into a recession. The S&P 500 is down 13.6% year to date on growing concerns that the Fed will not achieve a soft landing for the economy. So yeah, guys, I wish I could give more positive news, but right now I think we're going to be looking for more bearish moves, especially on Wednesday when the federal hike happens, another 50 basis points. So we'll keep in track of these. That's the news for today. these were the outlines, and I hope you can, take back and sort of look into these different things and stay frequent and keep up to date with our news. That's the news for today, guys. We covered the Celsius withdrawal halt. We talked about the Nexo buyout proposal of Celsius assets. We talked about MicroStrategy slump in price and its margin call at 21K. We talked about Stanley Druckenmiller's 6-month prediction of the bear market. And we looked into the economic calendar and the upcoming federal FOMC statement coming up on Wednesday. But that's it for me today. That is us out. Lightspeed. Thank you.